From theCUBE studios in Palo Alto and Boston, bringing you data-driven insights from theCUBE and ETR. This is Breaking Analysis with Dave Vellante.
Since the Gen AI awakening, we've said consistently that Nvidia and Broadcom are the #1 and #2 AI plays in tech. Now, since peaking in mid-December of last year, Broadcom shares have been under pressure, off on sympathy with other semiconductor stocks and the general confusion about the economy and tariffs and inflation and jobs and geopolitics and debt, et cetera, et cetera, et cetera. Broadcom's Q1 results were impressive and assuaged some of the fear factor. At one point last night, after hours, the stock was up 15% from its previous close, and midday today, Friday, it was up around 6 to 7% despite continued pressure on tech shares. The NASDAQ was down at that point. Market transitions such as the one we're in now often bring confusion and market volatility. As the new high growth sectors, we've talked about this a lot, they're not big enough yet to offset the slowdown in the larger declining markets. You know, Nvidia doesn't have this problem because it's at the mainspring of the new wave. Broadcom is facing a similar but somewhat different dynamic in that its traditional businesses are ones that are extremely durable and sticky. Moreover, we see two relatively new dynamics coming into play for Broadcom. First is hyperscalers are coming to Broadcom to enable their custom AI accelerators. They've done this for a while with 3, but they've got new ones that we're going to talk about. And 2, Broadcom's VMware strategy, it's working and it's lifting the company to new software heights. Hello and welcome to this week's theCUBE Research Insights, powered by ETR. In this breaking analysis, we pivot off of Broadcom's Q1 earnings to revisit our thesis on the company. And that fundamental premise is centered on the idea that connectivity, both within the XPU complex and across distributed clusters, remains a massive opportunity for Broadcom, and they're uniquely positioned. This combined with a radically new strategy for VMware that is delivering results much in the same way as we've been projecting. Now, we initiated our Broadcom coverage in earnest on Breaking Analysis about 3 years ago, and it was really catalyzed by the VMware acquisition. We wrote a piece at the time talking about how Broadcom was going to tame the VMware beast. You see that in the upper left of this chart. And we said at the time that for VMware, this means a dramatically different operating model with financial performance and shareholder value as the dominant agenda. And for customers, it was going to mean a lot more focused portfolio with less aspirational vision pitches, and most certainly higher prices. So we've definitely seen that. Now, the way Broadcom has executed is almost exactly the way Hock Tan said it would. We're going to narrow the focus, direct R&D on the core value, shed the non-performing assets, de-lever where possible, and run the VMware business like it runs the rest of the Broadcom business. And of course, a lot of people, he failed to say we're going to increase prices. But of course, his argument is that they're increasing value. Now, in the bottom right, highlighted in red, we updated our Broadcom scenario to remind folks that it was working. This is the VMware scenario, despite all the negative market chatter. And we're going to explain that in a little bit more depth today. As well, as you see in the upper right, a year ago at MWC, we featured Broadcom's semiconductor chief, Charlie Kawwas, to explain in more detail Broadcom's model and how he thinks about Broadcom and its durable businesses, its operating philosophy, and how AI is changing the technology landscape. And we updated that post again in March of last year. You can see in the middle and the left-hand side, it was coming off GTC, Nvidia's conference. And at the same week, Broadcom invited us to the Financial Analyst Day. So on balance, we've been pretty prolific writing about and reporting on Broadcom, and largely correct on Broadcom's approach, its prospects, its strategy, and the business outcomes for Broadcom and its customers and ecosystem. Now, not surprisingly, really, all you got to do is listen to Hock Tan, Broadcom CEO, listen to what he says, just do some of your own research and confirm that his do-say ratio is very high with a pretty strong probability of success. But look, it's easy for folks to get caught up in the market noise. The negativity around VMware and Broadcom's bundling and pricing tactics and practices, it's understandable why people are upset. Customers had been benefiting from kind of the free perpetual license ride for years, and Broadcom just shut that down. They summarily ended that practice to force a transition to a subscription model, which again forced customers to buy VCF in a bundle that's been widely reported. That jacks average contract values and drives profits, as we'll see in a minute. The ecosystem and customers worldwide were outraged, and you can see that outrage in the ETR data here. So if you look at this chart, this is a chart, these colored charts, the bars, that fundamentally explain ETR's net score methodology. Net score is like net present value, kind of a simple methodology. And what it shows here is that lime green is the percent of customers, and there are a lot of, so you can see here, we isolated on VMware, all the different VMware products, and there are a lot of VMware customers. I meant to get the ends, but it's in, close to 1,000, it's probably 700 or 800 responses in the ETR survey. And it's the percent of those customers that are, in the lime green, adding VMware new. Pretty interesting, people are still doing that. But there's always kind of a baseline there, and it could be divisions of companies. That's the lime green. The forest green at 22% in January of 25, that's customers spending 6% or more. And I'm sure there are a lot of customers spending more than 6%. The gray is flat spending, plus or minus 5%. The pink, that kind of light red area, that's now, you can see it growing from 9% in July 2023 up to 19%, steady increase in January 2025. Those are customers spending 6% down or lower than, worse than 6%. And that red, that 15%, that's people defecting from the platform. You can see in October 2023, virtually no churn. 4% churn. Now it's, up to 15%. You subtract the reds from the greens and you get that blue line, which is net score, which went from, a solid mid 20s down to negative territory. And that yellow line is pervasion. It's the percent of customers that are buying from VMware as a percent of the overall sector in the survey. And you can see that's down. And so if you look at that chart, you would say, wow, Broadcom, VMware, she's not working so well. They're losing all these customers. And if you look at the peer data for some of the alternative platforms in the ETR data, you'd think VMware was in big trouble. So let me explain this chart. So the two axes, the vertical axis is net score, says shared net score, and the horizontal axis is overlap inside of 1,800 accounts. So within 1,800 accounts, I said before, it's probably 700 or 800. You can see the upper right. The ends for VMware are 753. So this is in 1,800 accounts in the survey, the Technology Spending Intention Survey that ETR does. 753 are VMware customers, and that's why they're so high and dominant on the horizontal axis. The vertical axis is a net score or spending momentum, what we just explained in the previous chart. And you can see the dotted lines here. If you're listening on a podcast, you can't see it, but it's basically the net score went from around 20% down to the negative territory. It just kept tumbling and tumbling and tumbling since January of 2023. And we've plotted Nutanix, Ubuntu, and Red Hat, just picking 3 target platforms that potentially people would migrate to. I left Microsoft out because Microsoft always skews the data. If you follow this program, you know that sometimes we include Microsoft, sometimes we exclude them just because they're so dominant. But you can see VMware down to negative 15% on a net score basis. So again, you would think that's really bad news for VMware. But the reality is that this doesn't reflect revenue. It doesn't reflect average contract values. Now, we've shared in previous episodes the simple rationale for Broadcom's evolving business model. And so when you look at this chart, you basically see core infrastructure in the middle, that hardware infrastructure, server storage, networking, and infrastructure software, kind of getting squeezed, getting further commoditized by certainly cloud and silicon to the left, and then software to the right. So the infrastructure software is taking value away. Silicon's clearly taking value away. So that's where the value is migrating, and Broadcom's saying we're going to participate in both of those, and we'll leave the middle for Dell and HPE and Lenovo to fight it out. And Broadcom, of course, now they had CA, they had Symantec, but now on the right-hand side, they're much, much more prominent in software. It's about 45% of their business last quarter, and growing. So AI has been a tremendous tailwind for Broadcom, in large part because of its networking prowess. And this was explained by Charlie Kawwas last year at MWC 2024, almost exactly a year ago in theCUBE. Let's take a listen. Please play the clip and we'll come back and talk about it.
When you talk AI, everything has changed, because with AI you have these elephant workloads that cannot run on a single processor. Whether it's a GPU, TPU, NPU, the flavor of the day, let's call them for the next 15 minutes XPUs. So if you take these XPUs and you take some of these elephant workloads, you can't run them on a single XPU. You can't even run them on 8 CPUs or XPUs or GPUs. You have to now scale into the thousands today, thousands of these. In order to do that, you've transcended now a single system where you've scaled up. Now you have to scale out to many, many of these systems and racks, and you have to interconnect them. And guess what? If you don't have the right network strategy and connectivity strategy, this will not work. This will not scale up.
Okay, so go back to the previous chart, and you have on the left all the XPUs. They're talking to each other. They're supported by Broadcom NICs, and it's I/O, and it's supporting silicon, and all the way down to the storage and their RAID controllers and everything else that they do. There are only 2 companies really that are leaders in both XPU to XPU networking, kind of within the SoC and within the chips themselves, from memory to XPU, and then networking across thousands or even hundreds of thousands of, let's call them PUs, processing units in a cluster. 2 companies, one Nvidia and 2 Broadcom. And Nvidia, as you know, acquired Mellanox at the beginning of this decade and has leveraged that acquisition and its InfiniBand IP to develop proprietary networking. Broadcom has taken a similar approach but differentiates with what Charlie Kawwas calls Broadcom's OSP strategy: open, scalable, and power, as in low power. And Broadcom is a lead player in the Ultra Ethernet Consortium, and it's driving these open standards as a means of building its ecosystem at scale. And look, it's not a zero-sum game, to steal Matt Baker's line, former head of strategy for Dell. The AI market is big enough for multiple players. But let's come back and take a look at how this strategy is working for Broadcom. Here's a financial snapshot of the company, and let's walk through it. It's quite remarkable, actually. We're comparing Broadcom in May of 2022 with Broadcom today. So let me walk through this. Let's start with the revenue run rate. So you can see 32.4 billion, now 59.7 billion. Obviously, a big chunk of that is VMware. Look at the revenue growth. You can see it's accelerated from 23%, now 25%. Gross margin, 76%, now pushing 80% gross margin. Better than Nvidia. The operating margin is incredibly impressive, 61% growing to 66%. Now let's look at the sort of the asterisk here in the red, the VMware. So we plotted as VMware / software revenue run rate. The software revenue run rate is all of Broadcom. So you can see in May of 22, this was something that we reported on at the time. VMware, 12.4 billion. Broadcom software today on a 26.8, almost $27 billion run rate for the software business. Again, 45% of the revenue. If you look at the revenue growth, VMware was flat at 3%. Broadcom software revenue growing at 47%. Now, Hock Tan said on the call, that was somewhat of an anomaly because there were a bunch of deals from last quarter that spilled into, or 2 quarters ago that spilled into the past quarter. So that probably is not sustainable. And you look at VMware gross margin was 83%, VMware only, not bad. For a software company, that's pretty good. Yeah, a lot of software companies are in the 90s, but maybe not so high in SaaS because you got to pay the hyperscalers for the infrastructure, but still 83%, that's nice business. Broadcom software, 93%. So they've jumped 10 points, since May of 2022. And then look at the operating margin, 25%. Yeah, not bad, right? 25% operating margin is pretty good. But now look, Broadcom software today, 76% operating margin. So pretty remarkable when you think about it. Now, when people chirp about Broadcom and its business practices and how it's losing all this business, as the ETR data shows, what folks fail to realize is that it's not business that Hock Tan wants. He wants the high value business. Broadcom claims that approximately 70% of its largest 10,000 customers have adopted the full VCF stack. And that shows up in the gross margin line, that growing 10 points as we talked about, 83% to 93%. So we're showing you here VMware's operating margin. We went through that. Think about the alternatives to VMware for a moment. Those customers that are leaving, most probably to Microsoft, okay, whatever. Microsoft, they'll happily add more consumption, fine. What about Nutanix? Okay, that's cited often as a target. That's a single digit operating margin, if they're lucky. Red Hat before the IBM acquisition was 20% operating margins, roughly. Double that. Under IBM, Hock Tan still doesn't want it. You look at HP and Dell, they have VMware offerings, alternatives, or they're all partnering with Microsoft and Red Hat and others, or they're packaging some of their own VMware solutions if VMware lets them. You're talking about 10% maybe for HPE, Dell, mid single digits for an operating margin. It's just not great business for Broadcom. Coming back to this chart, there are free cash flow headwinds. Their free cash flow as a percentage of revenue is down pretty substantially. It's one of the few negatives, but this is largely a function of interest expense from the debt related to the VMware acquisition, cash taxes, they get a big mix of US taxable income, and the continued delay in the reenactment of Section 174. You may recall 174 is how you expense, or whether or not you can expense R&D. You used to be able to take it all at once. Now the IRS is forcing you to take it, to stream it over 5 years. So you only get 20% of the value in a given year. So there's moves to try to change that. Hopefully they do for a lot of companies. Anyway, we'll watch that. Broadcom also spends $100 million on capital expenditure, so that makes a difference as well in terms of free cash flow. But look at the market value that's been created in the past 3 years. It's really unbelievable. It's almost 4x. And at one point, Broadcom was a trillionaire, and many people believe it'll surpass that again. Let me just sort of roll through some of the highlights from its earnings call, some of the notes I took. Revenue up 25%, adjusted EBITDA is 66, adjusted EBITDA is 10% of the $15 billion of revenue. That's 66% of revenue goes to EBITDA. Its semiconductor business is, $8 billion, up 11% year on year. And then Broadcom gives pretty good guidance on AI revenue. AI revenue is $4.1 billion. That's a beat from what they said was going to be $3.8 billion. That's up 77% year on year. They're now forecasting, I think, 44% for next quarter, which you're probably sandbagging. The guidance is 4.4 billion, which is 44%. The non-AI semiconductor business, this is interesting, is flat to down. We always see this in these transitions. It was what I was saying before. The old isn't big enough. The growth in the new, and the new isn't big enough for the growth to offset the decline in the old, which is huge. And Broadcom's seeing that, but they're actually holding serve in their traditional business. The infrastructure software business, it's all about the VCF upsell. And then a couple of other highlights. Networking. I remember last year at the financial analyst meeting, listen to Charlie Kawwas say that their customers, their custom silicon customers, remember they got 3 big ones. It's Meta, Google, and ByteDance. They announced ByteDance last year at the financial analyst meeting. And we'll talk about this, but they got 2 more that they haven't divulged the names, and then plus 2 more that they announced this quarter. Again, they haven't divulged the names. I'll speculate later on who that might be. Actually, I'll speculate now. Could be Alibaba. Could be OpenAI. Maybe Tencent. Maybe some Microsoft in there, maybe. AWS? AWS works with Marvell. So maybe there's some AWS use cases. AWS is all about choice. So, maybe they see some use cases for Broadcom, but they said 5 hyperscalers. Is X hyperscaler? Is X doing its own silicon? So, there's some speculation and we'll keep digging on that. But the reason I bring that up is because at that event, Charlie Kawwas talked about their custom silicon customers wanting to get to 1 million XPU clusters. We always say GPU clusters. They don't like to say GPU because the GPU, you think Nvidia, Broadcom's more broad. It's XPU to them. So they enable the GPU that Meta's designing, the TPU that Google is using, et cetera. So they call them XPUs. And he said at the time, these big hyperscalers are working toward 1 million XPU clusters. He said they're at 500,000 now. They see their way. They're investing heavily to scale to AI clusters up to 500,000 accelerators. Again, they use the term accelerators or XPUs. They don't like to talk about GPUs. Initially, 500,000 with targeting 1 million. And they also talked about private AI. I've said before that, I wasn't really sure. Last year at VMware Explore, I said, their AI strategy might be a little weak. Their AI strategy is not a bad one. They're basically partnering with Nvidia, taking the Nvidia stack. I've never thought that VMware had a cogent data strategy. And I think, we've said many times, AI strategies have to start with a data strategy. Maybe VMware lets its partners worry about that. I just don't see a strong data play inside of VMware. And then the other thing I'll mention, everybody thinks, not everybody, but many say, Broadcom is just like a PE. They suck all the cash out and leave the carcass as the remains. That's not true. They narrow the R&D focus. They talked a lot about next gen switches and their Tomahawk and their SerDes, and they have some pretty kick butt R&D. It's just very focused and much more narrow than what we saw with the companies that it has acquired prior to the acquisitions. Anyway, as I said, it was a trillionaire. People think it's going to get back there. And one of the reasons is the TAM and the served markets. Hock Tan in the call talked about a $60 to $90 billion opportunity. This is like incremental opportunity from their current 3 hyperscale customers, Meta, Google, and ByteDance. And then at least that much from the next 4. Now he did stress, these are design wins. They're not customers yet. He doesn't call them customers until they start scaling, at volume. But it's also underscored by this chart that we've shown before. So this is meaning the opportunity that these guys have. So let's revisit this a little bit and talk you through it. This is something that David Floyer did, and he and I presented at one of our breaking analysis. So this is all data center equipment. It's cooling, it's power, it's compute, storage, networking, et cetera. And of course includes hyperscalers. And look, this was a flat market in the early part of this decade and last decade. It was a couple $100 billion. It even contracted in 2020. But extreme parallel processing, EPP, or what Jensen calls accelerated computing, changed all that. Look at this. It's a $200 billion market. Around 10% in 2022 was extreme parallel processing. In 2024, the market jumps from a couple $100 billion to $350 billion, with accelerated computing, or EPP, at 50%. It was like, what an inflection point. Just overnight, the market changed. Now the market's growing the overall market is growing at a 10, data center, we call it a data center supercycle. I hear people say they don't like that term, but that's what we're in. It's growing at a CAGR of 15%. This is all data center, despite the decline in traditional processing, with EPP in the low to mid 20s CAGR. By 2030, extreme parallel processing is nearly 90% of the market and hits $1 trillion by early next decade. That's not bad for a market that was flat and pretty much stuck at $200 billion for years. And Broadcom has a lot of routes to that market for both its merchant and custom silicon with the 3 hyperscalers, again, Meta, Google, and ByteDance, and 2 more, plus 2 more. Again, Alibaba, Tencent, OpenAI, Microsoft, AWS, maybe. Anyway, huge market opportunity for Broadcom. So let's wrap things up with a few closing thoughts. Like we say, Broadcom now with these hyperscaler design wins, it's got this custom silicon business and it's got the merchant silicon business. It's got a software business. These are durable businesses. They last for 10 years plus. That's the company's strategy. Yeah, I've always said Nvidia's 1 and Broadcom's 1A. Maybe I got that backwards. We'll see how that plays out. I still very much like Nvidia, but Broadcom as well. So it's now got this 3 + 2 + 2 hyperscale design wins. This $60 to $90 billion served available market of SAM by 2027. And that excludes the 2 + 2. So it's really this nice balance of merchant silicon, custom silicon, and software. And its AI business, it's at a $16 billion revenue run rate, growing at north of 40%, 77% last quarter. Now networking is as we've talked about, Bob LaLiberte and I were talking about this at MWC with a lot of our guests. Networking is an AI enabler. There's AI for networking, like Juniper's Mist, and there's networking for AI, infrastructure for AI, which is critical now. It is vital to build AI. Otherwise it's going to be the bottleneck and it's going to be a blocker to AI. So networking as an enabler, Broadcom, as we said, is scaling. Near term, they'll be at 500,000 GPUs or XPUs or accelerators in a system complex, targeting 1 million GPU clusters. Pretty amazing. And again, really important that their IP and only they and Nvidia with InfiniBand and NVLink and their networking technology. Those are the only 2 companies can do it, within the XPUs and across the cluster. So these are durable businesses with deep moats, incredibly profitable. And that's a winning hand, but there's definitely risks. Hock Tan talked about regulations. He was asked about the technology diffusion. We've talked about that before, the AI technology diffusion regulations. He kind of said he's not worried about it. Some of the analysts on the call were pushing him as to whether or not these were Chinese companies. He declined to comment. I think they absolutely are. It's going to be interesting to see if the administration kind of catches up to what Broadcom's doing. It's been notable to me that they've kind of, Nvidia has to dial down its technology. Broadcom's just supplying kind of the core enabler. And the hyperscalers, ByteDance, potentially Alibaba and others, are kind of on their own to try to, not on their own, but they are responsible for building the technology on top of it. So maybe that's how Broadcom's gotten around it. But you think about the technology, the AI technology diffusion regulations. Remember, there's 3 tiers of countries. There's those like the United States and those in Western Europe, UK, France, Germany, et cetera, that are with us. They're our friends. You can get chips. Then there's our enemies, Russia, China, North Korea, Iran. You can't get chips, no chips for you. And then there's this big fat middle, which makes no sense. It's like India, Israel, Switzerland, and a host of others where the regulations are so confusing, you don't really know whether or not you can even sell to those countries. So that I think has to be cleaned up, as we've talked about. So, but the bottom line is Broadcom can't really control that. Maybe it can influence it with public policy, but it can't really control it. Other than, if it has to, maybe it can dial down some of the connectivity and the bandwidth in some of its silicon, just the way Nvidia has done. But as we saw with DeepSeek, a lot of ways to skin a cat. Anyway, what do you think about Broadcom's prospects? Are you a bull? Are you a bear? Are you neutral? Are you looking for other opportunities? Let us know. All right, that's it for now. Thanks to Alex Myerson. who was solo today, and Ken Schiffman, who's on his way back from MWC. These guys are on production and they handle our podcast. Kristen Martin and Cheryl Knight help get the word out on social media with their entire team and in our newsletters. Thanks to all of you folks. And Rob Hof is our EIC over at SiliconANGLE.com. Thank you, Rob. Remember, all these episodes are available as podcasts wherever you listen. All you got to do is search Breaking Analysis Podcasts. I publish each week on TheCUBEresearch.com and SiliconANGLE.com. You can email me, david.vellante@SiliconANGLE.com, or DM me at dvellante, or comment on my LinkedIn posts. And check out etr.ai. They got the best survey data in the enterprise tech business. We're currently collaborating on an RSA survey, which they're going to release prior to RSA. We did one last year, as you recall. Amazing capabilities over there. Check them out. This is Dave Vellante for theCUBE Research Insights, powered by ETR. Thanks for watching, everybody, and we'll see you next time on Breaking Analysis.